Hey, it's Mike at Cross Country Mortgage. Time for your Monday morning update, but it is Tuesday because yesterday was President's Day, and I hope you had a great long 3-day weekend. The market was closed, so we're coming to you Tuesday morning for this short week of 4 days. Let's talk about what happened last week and what's going to happen this week in the mortgage industry, mortgage market, real estate, buying, selling a house. This is going to give you some insight about what to expect this week. So, what happened last week? Another week of flat rates, meaning that the rates ended the week the same way they started. Let's look at the charts. This is trading a mortgage-backed security in the bond market. When we see the graph go up and the green candlesticks, which represent 1 day of trading, that means money's flowing into the bond market and rates are getting better. When the graph goes down here, the chart goes down, that means money's flowing out of the bond market and rates are getting worse. So since January 27th, a little over 3 weeks ago, we have seen a flat rate, meaning it has gone flat with a lot of volatility in between. And last week was no different. We saw rates get worse, and then we gained everything back that we lost. Why'd that happen? Well, inflation numbers came out, and inflation was above expectations. And we know that inflation is the death of mortgage rates. So the higher the inflation, the worse the rates. And CPI and PPI came out, and it was higher than expectations. So that's not good. Then on Friday, retail sales came out, and it was horrible. People aren't buying stuff. You know, we're at $1.2 trillion in debt. So people have a lot of debt, and they're amassing more debt, but they're not buying stuff. They're not buying the stuff like they were, and that means a weaker economy, and that's good for mortgage rates. Money flowed into the safer bond market. So what are we looking at this week? What's going to impact the rates? I always try to give you a few things. Geopolitical is number one. First time I can remember that inflation wasn't number one. Second is the Federal Reserve. Third is central banks. No inflation is going to impact the rates, the market this week. Let's talk about geopolitical. Really two things that could move rates. Doge and tariffs, that's local politics or domestic politics, and what's happening in Ukraine and ending the war. So let's talk about Doge and tariffs. So we know President Trump has been threatening tariffs to a lot of countries, and the reporting out there is that, boy, if he's going to charge them more, that cost is going to be passed on to the consumer. It's going to cost us more. Yes. Now, there's some arguments to me that's going to be short-term costs. It's going to be a one-time cost. It's not going to just last and last. And then we have Doge. It's going in and obviously finding massive, not just millions, billions of dollars in waste. And they're bond traders, which is really where mortgage-backed securities are traded in the bond market. That's what we really pay attention to. They look at all of the waste that Doge is finding and making an argument that it could absolutely offset the increased cost that the tariffs may bring. And so they're saying that this is actually going to be a good thing in the long run. At least that's the initial mindset of bond traders. And when they stick more money in that bond market, that's better for mortgage rates. So they think this could be a good thing. One interesting stat that came out this weekend, Social Security. So Doge went into Social Security. The administrator just quit. In 24 hours, Doge found that 27 million U.S. citizens that receive Social Security are over the age of 100. Over the age of 100. And of that 27 million, 5 million are over the age of 140. Now, the oldest person in the world right now is 110 years old. So how many of those people are dead and still receiving, the families are still getting those checks that are automatically deposited in the family's bank account, and they're not saying anything? Just massive waste and no checks and balances, which is what Doge is finding. It's just incredible. So the numbers are so large, not just a little savings, billions and billions of dollars in savings, that it absolutely could offset anything that the tariffs do. So this is all heading up into the budget fight that's coming. Trump is proposing lower taxes, a lot of things. So a storm is brewing here, and boy, it's really exciting to watch. Second thing is the Federal Reserve. So they met a couple weeks ago. Now they're going to come out with the minutes of that meeting this week. And what we're really looking for is the Fed going to cut rates moving forward in 2025? They've talked about 1 to 2 cuts, 1 to 2. Is that going to stay the same? Are there any differences in the minutes of that meeting. And then the last thing, central bank, China, New Zealand, are they going to cut rates? What are they doing? We're a global economy, so what other central banks, major economies do absolutely affects our bond market and money flowing in and out of that bond market. So we're floating this week. We really don't see much movement in rates. It's going to be another flat week. We don't even expect a lot of volatility this week like we've seen in the last 2 weeks. So starting the week floating, and if we see any changes, obviously we'll move our clients to a locking position. If you have any questions about the market and the rates, let me know. If you know somebody could benefit from this video, please, please, please forward it to them. I appreciate you watching. Have an awesome day.